Good day, everyone, and welcome all of you to this exclusive conversation with one of the veterans in Sri Lanka's capital market landscape. Today, I have the honor of speaking with Mr. Dadigama, the Director CEO of Softlogic Stockbrokers. Mr. Dadigama brings with him 25 years of experience in the Sri Lanka's capital market arena. So he began his journey with John Key Stockbrokers as an investment advisor, followed by senior roles at Asia Securities, where he served as the CEO. As a former president at Columbus Stockbrokers Association, Mr. Dadigama has built a strong network, both locally and internationally, handling high net worth and institutional clients, and actively promoting Sri Lanka's capital market globally. So, Mr. Dadigama, to begin with, could you share your perspective on the current state of the Sri Lanka's economy as we emerged from what has been arguably known as the most challenging financial period of Sri Lanka's recent history?
Morning, Natasha, and thank you for having me. Yes, so I think very few countries, if you take over the last 10-15 years, has gone through what we went, starting with the Easter attack, followed by COVID, and then the economic crisis. Took Sri Lanka down to the bottom, but if you really call it. And I feel over the last 1.5 years, we have seen some kind of stabilization happening. Initially, we are seeing inflation, a low inflation environment, now single digit for quite some time, which is very encouraging. We are seeing the rupee stabilize at the current levels, again, giving confidence to foreign investors who don't like to see a big fluctuation in currencies. Foreign reserves have improved. Yes, the IMF tranches have helped, the Chinese loan has helped, but I think on our own also, we are gradually building those reserves up over the last few months. I also feel the central bank policy of the low interest regime is helping economic growth. Plus, that has also trickled down into the stock market because people don't have much investment opportunities any longer. So I feel, yes, I'm still cautious because I would like to see this whole thing continue for a while, but I'm being very optimistic that we are on the right path now.
Thank you so much for that explanation, Mr. Dadigama. So we know that Sri Lanka is having active engagement with the IMF, and it has garnered significant attention so far. So would you like to evaluate the progress that has been made under the reform agenda and its implications on investor confidence?
Yes, I think the fourth review was done. There were a few suggestions or concerns by the IMF, which the government, I think, took on well, and I think some were due to some technical issues in accounting policies of some state institutions. But overall, I think the performance has been very encouraging. I think the current government is keeping in line with what is required from the IMF and achieving all the targets. I think the tax collection extremely encouraging. I think the transparency is one of the, I think, key things that foreign investors are looking, and I think the IMF and this current government sticking to the plan that has played out well. I feel overall, if we continue in this path, I think I don't see any reason why that we shouldn't work closely with the IMF to achieve what they want, and from a government's point within the framework, I think we can achieve what we also need.
Yes, so in your view, which sectors are actually demonstrating the most resilience backed by the economic recalibration? So what would these key sectors play in the broader recovery?
Well, I think the banking sector is the key growth, if you see, because everything revolves around this sector and they are continuing to do well in this low interest environment. You're seeing increase corporate borrowings and people moving into new businesses, expanding their businesses, and maybe projects that were put on hold now gradually, kicking off. So I think this is one of the main sectors. Sri Lanka's banking sector has been, from a capital markets point of view, the The other companies, I think the manufacturing sector should perform well once again with economic activity picking up. Pharmaceutical, consumer spending, I think we are seeing that happening. And I, I feel somewhere down the line, tourism is also going to play a key role. If you can see the numbers are good. Yes, we are not might not hit the targets the government wants, but when you see the amount of capacity airlines are adding every quarter, I think that goes well for the forward bookings. Otherwise, they are not going to just add so much capacity into a small country like Sri Lanka. So I think tourism is going to be one of the key drivers, and with that comes the US dollar inflow into the country, which is also going to play a significant role in the IMF program.
So thank you for those insights, Mr. Darigama. So we know that the Colombo Stock Exchange actually hit the 20,000 mark on the ASPI recently. So what does this milestone actually signify for our capital markets and investor sentiment?
Well, it's very significant from where we have come over the last decade to see the index at these levels. Yes, there will be resistance as we go along, like we saw at 19,000, 18,000, but it's definitely a confidence that the market is definitely having more room to move and has legs, and it's backed by decent volume, which is encouraging. So what we feel is that while there will be corrections along the way, the market's heading in the right direction. Valuations will play a key role. I feel when we see the earnings coming through, it's encouraging. Some companies have done well quarter on quarter, some have not performed as expected, but you can't expect significant improvements every quarter. Then there's something amiss if you're going to, so there will be consolidation and we will see some very good earnings going forward, barring anything externally like the tariffs and things is beyond our control. So I feel Sri Lanka has succeeded in negotiating with the US government, which is very encouraging for our exporters, especially people who are predominantly US based exporters. I also feel that from where we were over the last few years, the market has got broad based, which is very encouraging. It's not down to a few investors. There's good mix of institutional and also high net worths playing the market. What we don't see right now is the foreign investors, and I think we are about 1.5 years from where they will enter the market. They will want to see economic stability. They are not going to come because the market has a hype. We have seen this over and over because they have also got bitten by investing in the market at times. So if the budget is going to be crucial, I think it will be November. So how the budget plays out, what is in the budget, will give some confidence, because obviously the IMF program continuing gives them confidence, stability like we spoke earlier. But I think overall, we are looking at maybe 25, 26, 27 before we see real foreign investors coming on the back of confidence and continuity. That is the crucial thing. Taxation is one thing that they don't like to see being, withdrawn or increased haphazardly. So I think the locals will sustain this market, like I told you, but it will be nice to see some good foreign investors coming into the market, some good names who have been in Sri Lanka. And so overall, I think the market, from my years of experience, we have seen is doing extremely well, backed by significantly good volumes.
Thank you for that clarity, Mr. Darigama. So with the current market momentum and economic stabilization, what advice would you like to offer for the institutional and retail investors who are evaluating entry points into Sri Lanka's equities?
Well, that's a good question, but it's a challenging question also, purely because you need to be mindful of what you're getting in. You're getting it at an all-time high. So now you need to see what are the counters that have further upward momentum that can see another growth, because you have to look at least 15 to 20% return if you're getting into the stock market. So I feel there are counters. I think you need to pick the right counters. Valuations matter. dividend yields. People are looking for dividend yield counters, and we are still seeing about 8 counters which are giving yields of over 9 to 10%, which is quite reasonable. And also, on top of the yields, you're potentially seeing a upside in the counter values also. So I think be wise and invest in the market. There are still counters that are trading at 10, 12 times P's, I think, which are still good. Because if the earnings come to back over the next few quarters, come to back these prices, those P's will come down. So we are looking at basically 26, 25, 26 earnings coming well, and then the market also will get re-rated, possibly with P's looking even more attractive. And also the other thing is, Natasha, there's nothing else for investors to invest in now because treasury bills, corporate bonds are all below 8%, and then you're paying tax on it. So uh, the opportunities in the stock market, I'm not saying put all your investments, but I think you have a nice diversified portfolio, it will give you good returns.
So, when you look ahead into the next 12 to 24 months, what key economic or market indicators you are watching, and how should investors position themselves?
I think few of the key things is sticking to the IMF policy, working with the IMF closely. Next one will be to see the growth, because now people look at GDP growth region wise. They take our competitive countries and compare us. So we have to be up there. Stable interest, currency are crucial. We can't have currency fluctuation. It's not going to bode well with the foreigners. I also feel that sticking to this current government's policy, and I think transparency, corruption-free environment, message going out to investors that we are back in business. I think Japan has indicated. There are a few other countries also which is showing interest in Sri Lanka. Potentially the Central Expressway getting off the ground. I think these will give investors even locally. Sri Lanka is now starting to gradually move out. The airport is happening. So you're seeing economic growth happening. The port is going through, I think recently we saw a significant improvement in the first half with profitability, transshipment volumes, Hambantota is kicking in. So overall, these are crucial factors. Like I said, tourism, I think we should be easily doing over 3.5 million. Sri Lanka shouldn't be even a topic up for discussion within the next 2 years. We have to get over 3.5 million. So with all that, I think, and consumer spending, you can see, I think recently some 35,000 new vehicles were registered in July alone or June. Yeah. So, people have the buying power now. So it's not that, no one is not doing anything, waiting for cheaper prices. People are continuing. Still, I think Sri Lanka is a Western province driven economy, sadly. I think hopefully with tourism and things happening and the government's focus on taking development into the other provinces, we will see some other provinces also getting traction in development projects and potentially, getting somewhere close to the Western province over the next 5 to 10 years.
That's very insightful. And from a leadership perspective, how is SoftLogic Stockbrokers positioned to guide and support clients in this evolving landscape?
Well, I think over the last 12 or 13 years since the company has been in existence, we have offered our clients absolutely good advice. We have a strong research team. Over the last 4 years, that team has continued to perform well at the CFA Awards. So it's recognized by that institute as a good company that delivers good research. The trading team is a very good experienced team. We have a mix of good young brokers and experienced brokers, and we continue to offer our clients a lot of good advice, not wanting them to come and get into the market for the sake of it, but looking at giving them a personal return and where they increase their wealth, and they will continue to work with us. Some of our clients have been with us for a very long time. We had very few issues with our clients. And also, we are strongly IT driven. The sector is IT driven, and that has rubbed off on us. We are continuing to continuously improve on the digitalization front, and we will continue to change and evolve with the new tools that are available to us, and to offer our clients the most sophisticated trading options, even if it comes to back office, where they can, a touch of a button, check anything rather than contact a broker. We are getting there. Hopefully, by the next 3 to 4 months, we'll be able to roll out that. And also, I think basically, I think I have covered most of it. So I don't want to harp too much on about what we offer.
That's quite interesting. And finally, Mr. Darigama, from your extensive experience over the past years, what advices or key insights or lessons would you like to share with investors and industry stakeholders when driving through this environment of the market?
Well, Natasha, after being in this industry for almost 3 decades plus, I think one of the key things is this is not a short-term thing. You have to look at your client as a long-term investor. Short-term gains are good, medium-term gains are good, but if he gets a decent return, he will continue to work with you. Give good advice, honest advice, and be honest upfront, and treat your client as the most important person around, because ultimately it's his money, it's not your money. So you need to give advice from that point of view. And if you build that confidence, those clients continue to stay with you. And it's all about reputation building in this industry. You need to also look at long-term sustainability rather than, just because the market runs up for 1 year to make money and get out is not. If that happens, it's a good thing for the client. But you should look at take a more long, from a broker's point of view, a more long-term personal view of yourself, and always be honest and give the client the best advice for the benefit of the client. Don't look at yourself. Don't put yourself as the beneficiary. The client has to be the beneficiary, because it's his hard-earned money. Whether it's 100,000 or 100 million, it's their money. So we need to make sure that they see growth in that investment they put into stock.
So thank you very much, Mr. Darigama, for your invaluable insights and the clarity given on the current context as well as the future outlook of Sri Lanka's economy and capital market. So we can see that challenges still remain. However, the path forward is paved with opportunity for those who are informed and ready. So to all our viewers, stay tuned, stay informed, and let's keep building Sri Lanka's financial future together.
Thank you.